Accounting equation and Excel. Enter billable expenses to an invoice. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation using Excel. Here we are in Excel. If you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you may want to begin back there or just construct your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook though, 3 tabs down below. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever, because our merchandise is better than their stupid stuff anyways. Like our CPA 6-pack shirts, a must-have for any pool or beach time. Mixing money with muscle, always sure to attract attention. Yeah, even if you're not a CPA, you need this shirt so you can like pull in that iconic CPA 6-pack stomach muscle vibe, man. You know, that CPA 6-pack everyone envisions in their mind when they think CPA. Yeah, as a CPA, I actually and unusually don't have tremendous abs. However, I was blessed with a whole lot of belly hair. Yeah, allowing me to sculpt the hair into a nice CPA 6-pack like shape, which is highly attractive. Yeah, maybe the shirt will help you generate some belly hair too. And if it does, make sure to let me know. Maybe I'll try wearing it on my head. And yes, I know 6-pack isn't spelled right, but 3 letters is more efficient than 4, so I trimmed it down a bit, okay? It's an improvement. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. Example, practice, blank. Example, in essence, the answer key, the practice tab having pre-formatted cells so you can practice the practice problem with less Excel formatting. The blank tab, the one we will be working on, is where we started with a blank worksheet but are basically working from a template. However, we will be adding to that template as needed as we go, practicing our Excel skills for formatting's sake when we do so. Let's go to the example tab to get an idea of what we will be doing. Remembering we're constructing our bookkeeping system with the accounting equation. The accounting equation, in essence, acting as our trial balance from which we will construct our major financial statement reports, that being the balance sheet, the income statement sometimes called the P&L, the profit and loss report. We've been looking at what's kind of like the first month of operations, doing the journal entries to start off with, which are somewhat unique oftentimes to the startup of a business, the need for capital, the need for cash, in other words, to invest in what is needed to generate revenue. That journal entry coming from often the owner or the bank in the form of a loan to get the money then necessary to spend that money in investments to the business, the startup costs, things like property, plant, and equipment, and possibly inventory, depending on the industry, so that we can then use that to generate revenue in the future. And then we work through a month worth of data input for revenue. We sold inventory, guitars in our case. We looked at service items, general service items, and now we're looking at billable items. Billable being a term often used in accounting software applied to billable time and applied to billable expenses, basically used oftentimes in a job cost kind of system. Job cost systems usually bring to mind like construction companies, which have longer term costing systems and are an area of specialization oftentimes in and of themselves. So we can have a whole course on job cost systems for longer projects, which also have to do with the materials and so on that are going to be applied to a longer job. But also they could be service companies as well. And that would be the classic examples of a law firm or a CPA firm, in which case you have partners which often share like the resources in essence to work on basically their clients, in essence, is how the classic structure kind of goes, including the employees, in which case you need to track the time spent by the staff so that the partners can apply them to the proper billable scenario. And you could have situations where you're purchasing things that you want to invoice on. In other words, if I'm going to be buying stuff particularly for a particular project, then I might want to create my invoice on like a project-based kind of system, on basically a job-based system, saying this is how much money I spent, show that on the invoice, and show that I'm going to have a markup of like 30%. That's going to be my profit. So that's another kind of linking system that we could have. And you can imagine if that was the case, then we can imagine that when we have an expense that's usually done with an expense form or a check form or a accounts payable bill, then we can say, hey, look, I'm going to make that item billable using the system in like a QuickBooks or Xero to allow me to easily turn around and create an invoice from the information that I spent money on, because I spent the money specifically for a particular client, again, in like a job cost kind of system. Now we have to be careful of these transactions because they can get a little bit, there's some little quirkiness to the connections of these items. What I want to do here is show this in an Excel format, which is more transparent, but doesn't have as much linkage as would be in a database like a QuickBooks or a Xero. And then within QuickBooks or Xero, hopefully you can better imagine how the connections work, which might lead to less problems when using these kind of connections. Because once again, the database is not transparent, right? Your things are happening, and if you can't visualize what is happening, you're not going to understand how to use it. All right. So keeping that in mind, we're going to go back to the blank tab. And you'll recall in a prior presentation, we entered a timesheet way over here for our employee. So we entered this, we have Erica is our employee. Now we imagine we could pay Erica either salary or hourly. And if we tell her to give us a timesheet, we could have that connected in like a QuickBooks or Xero if that's what we're using. Possibly a fancy system where she logs in on her own on the cloud, and then it kind of pulls in to the QuickBooks system, which will give us this information, which we could use to generate her payroll. But possibly we pay her salary and we don't need it for her payroll. We need it to turn around and invoice the client in a similar way as we would see in a law firm or a CPA firm. In this case, we're imagining she does guitar lessons or something like that. So that's going to be the billable time that we will enter. Now we could just manually enter it into the system as billable time, creating our invoices, or we can use like a QuickBooks system to enter the billable time and then use that information to pull in, use the billable reports worksheet to pull in and create invoices from it. The other use of this billable term, and by the way, this is another terminology that has kind of changed over time. Billable, obviously billable hours classically means, you know, that you've got hours that people are working that you're billing the client on, whether that be you, the owner, if you're the owner, or the staff. These are billable time. And what it means by billable is, remember that term bill could be used interchangeably on either side of the table. We received a bill from someone we purchased from, or we're paying, or we're creating a bill. But within the more stringent terminology of software, usually when we're billing the client, we call it an invoice. So notice how these terms are getting kind of messed up, because now I'm calling it billable hours. Bill for a data input form usually means that I'm purchasing something, not that I'm charging someone. Right? So when I say billable hours, I've got to keep this terminology straight in my mind. Billable basically means invoiceable hours to us, right? Because we're entering the hours which we are going to create an invoice form from. The invoice form in normal parlance term is us billing the clients, but really the form is invoicing the client. And then that billable terminology has also been applied to the supplies or other purchases. Anything that I buy, whether that be supplies and materials or whatnot, that I might expense, but then I want to pull into something that I'm going to charge the client for. Once again, we're calling it billable. And that term is confusing because we are going to create an expense form or a bill form for it when we purchase it. But what the term billable means is that we're actually going to invoice it. We're going to use that to connect to the invoice and then invoice it. Okay, so the language is always, it's language. I think in every category of life these days, the language is getting confused, and people are taking advantage in some cases of it being confused because the technology is kind of warping things, and it's really easy to get lost in the weeds, and people are just, it's like Babylon, you're just talking past each other because no one knows what anybody's actually talking about because they're distorting the definitions of everything, either intentionally or just because technology, in our case here, is moving faster than we can keep up to define things. So in my opinion, if you're able to really define things out, you'll clear up a lot of problems by just being able to explain exactly what you're talking about if you're dealing with someone who's a good faith talker, like that you're talking to someone who actually wants to solve a problem as opposed to just cause problems by confusing people. So in any case, let's pull this over here and say, now we're going to invoice based on this information. So we're going to say, all right, let's go down to the bottom here and say, okay, so then on 130, we're going to imagine that we're going to invoice for billable time and supplies. Okay, so on the time side of things, and then supplies. So we're imagining with the time that I already billed them, we already recorded, the billable time over here in our timesheet. This is the one we recorded last time. So I'm going to go back way over here again. We recorded for Jones Guitars last time, and now we're going to go for Smith Guitars. Let's do that over here. Let's bring this over and say we're going to do this for Smith. Let's put that in our terms here. I'm going to copy this. I'm going to copy it and put it down here and say this is for Smith Guitars. So let's indent this and let's indent this. So now for the time, now if I did this in a QuickBooks, then the billable time might have been entered by Erica on her side, and then I can run a report for billable time and say, okay, now I see during my billing schedule every week or every 2 weeks or monthly, I see the billable items, which I can then create an invoice from. So I'm going to pull that into basically my invoice, which is going to be equal to, and I'm going to go up to my worksheet up top, and we will pick up the 808 hours here that's now being applied to Smith Guitars. Obviously, I can't apply the whole 16 hours because I have to apply it to the proper clients times the billable rate, which is 100. So now we're going to charge Smith on an invoice $800. And then we also have the supplies, which I think we purchased up top. Okay, I haven't put the supplies on the books yet. Let me copy this. I'm gonna copy this whole. I'm gonna copy this and I'm gonna put it down here for now. And then I'm gonna say, okay, first let's record the supplies. All right, so I'm gonna go. Let's undo this, and let's say we're gonna buy supplies. We're buying supplies specifically for a job that we are doing for Smith Guitars. So we're gonna say we pay cash for billable office supplies. So I'm going to say, and we're buying them for Smith Guitars. All right. And so then we're going to say that was 130. So this would be just a check form that we're purchasing this with, even if it was an electronic transfer. This might come through the bank feeds or something like that. And I could say cash is going down. Now, if it was going through the bank feeds, when I say it's billable, that means that I want to turn around and use this as the basis to create an invoice from. Notice that that can mess up your bank feed situation if you're trying to record things as they come through the bank feed, because you need to then take an extra step and say, well, that particular item is a billable item that I want to be able to turn around and create an invoice with. Okay, and that gives you that link between the two. So I'm going to go over here and say it's going to office supplies just like normal. That would be our normal transaction. Boom. And let's put zeros across the board. Zeros across the board. And so there we have it. And we got the zeros across the board. Okay, let's put an underline here. We're going to say home tab, font group, underline. We're going to put an underline here, underline, and then we're going to put an underline here, underline, and then we'll copy this down, see if we're in balance, which we should be, ba-boom, in balance, ba-boom, in balance, ba-boom, in balance. Let's put an underline under these. Home tab, font group, underline. Okay, so that's great. Now, in our Excel worksheet, I can't add the fact that it's billable, right? I can't automatically say I want to pull that into the invoice. But when you look at the QuickBooks, this is the added component that you could imagine in place, that you can link the forms together, giving you a greater audit trail and possibly a more of a reminder to help you with the billing process. So you said, when I created this form, if I say I want to make this billable, then it might show up in our billable reports as well as in the subledger for Smith Guitars as something that hasn't created an invoice. It doesn't record a transaction yet. It hasn't recorded like revenue yet, but it's something that I can turn around and create an invoice with. In our case, we're just going to say, okay, that supplies is part of our invoicing process. So now I'm going to pull this part up. I'm going to say, let's copy this. I'll put it right here, and then I'll delete the stuff underneath it. I'm going to format paint so it doesn't mess up my formatting down here. Okay, so now we've got the time is going to be, I'll do this again. I'm going to scroll up to the top. We're going to bill for these two things now that have taken place. The time is going to be over here for Smith Guitars, and 8 hours times 100. So there's the 800. And then the supplies, I'm going to pull into the invoice at 130. Now, notice an issue here that happens when I pull this into the invoice. Usually, if this is going to happen like automatically, that I pull this into the invoice, then I might be missing the driving factor to tell me which account I'm going to hit. In other words, an invoice is going to be, if I'm billing the client, it's going to go generally to a revenue account like service revenue. But I might have multiple different revenue accounts that I need to hit. So depending on what kind of work was done, in this case, I have sales for inventory and service revenue for the service revenue. And when I make something billable, I'm basing it on the bill, which doesn't have the driving factor, which is the item often called in QuickBooks, that tells me which revenue account to hit. So you end up with this problem that, okay, if I pull this into the invoice, we have a couple problems. One is that I might want to mark it up. I might not want to charge it for 130. I might want to say I have a 30% markup because that's my revenue cap. So that's one issue. So I might be able to adjust the settings like in QuickBooks to say mark it up by 30%, or I could just say I'm going to put all of my costs on my invoice as costs at cost, and then add a line item and show it on the invoice saying this is what I actually paid for the thing that went towards the job that I did for you. Here's my markup, which is 30% based on the total of that. So there's a couple different ways we can deal with that problem. The other problem is that, again, I don't have something that assigns it to a particular income account because I didn't use an item. Whereas you'll recall with the time here, when I entered the time, oftentimes in a QuickBooks system, if I use the QuickBooks system to do the data input, I will have to use an item saying, I want you to charge Erica's time as an item to service item. Or I might be able to add a different service item based on what Erica worked on to then apply it out to the income account based on what I input for the service item. I need that linking tool. If I don't have that, the system kind of has to guess on what account it's going to hit. Now, the worst thing that could happen is that the billable time doesn't go into a revenue account at all. In other words, it's just going to decrease the expense account. It's going to act like a reimbursement. So it's going to say, I'm not going to record it as income. I'm just going to reimburse you. Now, most of the software has fixed this as the default is not this reimbursement thing, but you have to be very careful and make sure that this is the case. And I just want to show the problem, and that'll also show why this item thing, the linking thing, when you get into like software becomes important. Okay, so the time is going to basically be linked properly and go to service items. So I'm going to say it's going to go into not sales, we'll call it service revenue. It's going to go up by the 800, and the other side of that is going to go into the accounts receivable. And then the supplies is going to be part of the invoice too, and we're going to increase it, charging the client for 130. This is what we don't want to happen though, which could happen if you're not careful. Be careful of this, is that they take it out of what we were charged because we got reimbursed here. So I could say, well, why don't I just do this, which would negate the expense because I was reimbursed for the expense. The problem with that is that's not what we want to do. We want to say, I want you to have an expense here on the books. That's what we paid in order to help us to generate the revenue. So what should be happening is the expense should be going up and this should be part of revenue. And it's like, well, yeah, but I had to pay for this 130 in order to generate the revenue. It's like, yes, that's an expense though. We want to show the revenue itself as revenue and then deduct the expenses. We don't want to negate the expenses basically, even though we used this expense to help to generate the invoice. We told the client, basically, this is how we came up with the invoice or the bill that we sent to you, but we're not going to negate all of the expenses. We're still going to record everything on the invoice as revenue. So this is like basically incorrect, but I want to record it like this just to be careful so we can see the difference between these two items and make sure that we understand when you're using software what to kind of watch out for. This is going to be the issue that we need to kind of watch out for. All right, let's put some zeros across the board. So I'll just go, okay, zeros across the board, zeros across the board, and then I'll do it again, zeros across the board down here, zeros across the board. This is quite tedious. Are you kidding me right now? No, we have to make it, you have to put the zeros, otherwise it's going to get confusing because then you won't know like what line you're on. And then we'll put an underline under these, home tab, font group, underline. It's important. This is important stuff here, people. You can't just skip the format for formatting's sake. Why do we need to do this? For formatting's sake. That's why. For formatting's sake. All right, let's copy this down. We're going to copy this down. And we'll copy this down, see if we're still in balance. We're still in balance. So green zeros still in balance. And then let's pull the balance down here. I should have had a balance here. Let's pull this balance down. Hold on. I didn't do a balance in between those. All right, I didn't have a balance there. I'm gonna be okay with that. I'm just gonna put the balance down here. It's gonna look a little funny. That's okay. This equals, wait, not like that. Let's do this. This then, no, I need a balance. I need a balance here. Let's do this. I'm going to fix this. For crying out loud, the balance has to be down here. Equals the sum of the prior balance and this balance. So we'll fix this one, put the balance in place. See, I got ahead of myself, and then it messed it all up. You don't get ahead of yourself. Wait for yourself, okay? Wait for yourself. You don't need to be so impatient. We're going to paste it, formulas only. Okay, so there's our prior balance. Okay, so then we can sum it up down here. Equals the sum from here down to here, the prior balance plus the current activity. That should put us back in balance. Let's copy that across the board. Copy it across the board. Copy it across the board. Copy it across the board. And boom. Let's see if that puts us back in balance, baby. Copying it down. Copying it down. The red should turn green. So that's good. So notice our accounting equation's in balance. The double entry accounting system is not going to fix or detect what I would call basically an error here, which is to reimburse as opposed to put this in revenue. However, we should be able to kind of see that because notice that the expenses should only go one way. We never have the expenses go the other way. All of the income statement usually goes only one way with some exceptions, meaning revenue goes up and the expenses kind of go up in the expense direction, which brings net income down. So this is like the improper way to see it. Now let's imagine how we'd fix that. So I'll make that yellow so we can say, wait, error, something's wrong there. So how can we do that properly? We can say, okay, let's do this again. 130, 130. Let's say we say cash. So now we're going to say cash for billable office supplies again. And this time we're going to charge it to, let's just do the same, I guess, Smith again. I'm not sure I charged it to Smith again, but we'll just, doesn't really matter for our purposes. We're going to say we're charging it to Smith $200 again. So now we're going to say cash is going down, normal kind of check form or expense form, and the other side's going to go to expenses, just like a normal form would, same kind of idea. And this is going to be equal to negative of the 200. But this, if this was an actual form, I might be able to check off if it was in software. I want this to be billable and I want to assign it to Smith Guitars, which means that when I run billable reports or when I look at the subledger for Smith Guitars, it's going to show that I have this billable expense that I can then turn around and use to create the invoice. All right, let's put some zeros across the board. Zeros across the board. Now I'm going to imagine that I bought that 200 of supplies specifically for Smith to do a project for them that I'm going to use to generate revenue. So same kind of scenario. I'm going to put some underline here, and then underline here. And so now we're going to say, okay, so now we've got the balance. Let's copy this down, copy it down. Don't get ahead of yourself. Don't get ahead of yourself. One thing at a time. Uno, cosa, casa, cada, cosa. I don't know. Let's put an underline here. And then we have to bring down the balance. Let's bring down the balance equals this, equals the sum of the prior transaction plus the current activity. We're going to copy that across the board. Copy it and paste it with just the formulae. Just the formulae. Just the formulae. Oh, what are you doing? Just the formulas. Okay. And that should put us back in balance. Okay, so now we're going to turn around and use that check form, we're imagining, to create the invoice. Now remember, the idea here is that usually when I make an invoice within a software like a QuickBooks, I have to have an item, they call it an inventory or service item, which is the thing that drives the system to know which income statement account to hit. So if I'm pulling this in from a bill directly, then the problem is the system doesn't really know which account to hit. It knows that I want to make an invoice with it, but I haven't assigned an item. I haven't assigned an account to hit with it. So the worst thing that can happen, again, is that it just reverses it to the account that we hit, office supplies. That's not what we want it to do. Normally, the default, now they've fixed it in most accounting software that it will at least default to an income account. Now, normally it's going to be just like a generic income account. So it's going to be like billable items income account. So still, it's not perfect because you can't assign it to the income account that you exactly want, possibly. Or possibly in some softwares, you could assign it to the income account you want. But notice that you only can assign it to one income account unless you're allowed to assign the item at the point that you pay the bill. In other words, when I pay the bill, I want to tell the system, hey, look, I want to pull this into the invoice. I want you to link it to the invoice, but I'm not telling the system which income account to hit with it. So if I say, just give me a generic income account, it's going to give me like a billable income, which might be fine. Or maybe I can set the default to assign it to one income account, but I can't easily choose which income account and have different income accounts for different billable items unless when I enter the bill, I tell it which income account I want to hit when it goes to the invoice, which would make the data input for the bill more tedious. You see the problem here? Because I want to make the bill data input as easy as possible. The bill data input is typically in a large system done by a different person and department than the invoicing data input. So I don't want to make the bills commingled with the invoicing. I want it to link together as seamlessly as possible, but still be able to use this kind of billable link thing. So this is the problem that comes into play. But usually you can at least say, hey, look, just assign it, anything that I make billable when I make an invoice from it, assign it to at least a revenue account, not an expense account, okay? And so then you can link this out and say, okay, now we're going to say that we're going to have an invoice. So we'll say we're going to invoice for billable supplies. And this is for Smith Guitars. By the way, I should be adjusting the subledgers too. I forgot to do that. Let me do that too. So we're going to say invoice is going to be, how much is it for? $200. So we're going to say accounts receivable is going up by the 200. And the other side is going to just go to service revenue this time. That's where it should go properly. Or not sales. I'm going to say service revenue. Boom. And so there we have it. And so now we'll put zeros across the board. This is for, again, Smith Guitars. So I'll put zeros across the board. Zeros across the board. Okay. And, I'm looking at my worksheet. I'm actually going to make this go to Jones Guitars to match with my worksheet. Jones Guitars. So let's go to the subledger now. And I'm going to say, all right, Jones Guitars, here it is on the subledger, equals the 200. It's going up by the invoice. I'm going to also do that for the one that I did up here. This one was for Smith Guitars. So let's go to Smith Guitars. So here, this is going to be equal to the 800. And then I'll copy that down. So there we have that. And now let's copy down the totals. My running balance for my subledger should now be at the 14,687. Let's go back over here and see if that is the case. 14,687 after we sum this up. So I think that's right. Let's put some zeros or some underlines in play here. Underlines, and underlines. Let's bring down the balance. The balance needs to be brought down. equals the sum of the prior balance and the current activity. Copying that, pasting it across the board. Formulas only, just the formulae, and almost there, done. Bring it back to the left, pulling down the balances, pulling them down put in an underline here, boom. And so we're back in balance here once again. So that's going to be, so hopefully everything worked out on that one. That's the general idea with these billable items. Remember, in this system, we have the double entry accounting system. We can't really see that added link that we could use, but hopefully that gives you an idea that when you get into like a software, the forms could be linked together and give you that added information. But you have to be careful of certain things, like what account it's going to be hitting when that happens, and how exactly are you going to look up those billable links? How are you going to do the data input for the billable items when you enter the billable items? And how exactly are you going to do the timesheet entry if you have a billable situation for entering time type system?